the most well-informed, not just the most well-funded, but the most well-informed money in the world is scrambling to get hard assets. And there's something called the Cantillon effect, which speaks to the people closest to the money supply win. And in the end, I don't see how we don't go into some sort of a massive hyperinflationary environment. And in that environment, he or she who has assets wins. This entire experiment, my guess is he or she who loses least wins. And I think that that's where we're heading, to some sort of a correction in the equity markets. When you see the hedge funds bailing, when you see the insiders bailing, at the same time you see the retail investors, maybe the most heavily invested ever on a percentage basis, that's not a good omen. That's why so few people ever succeed in investing. And the big money has repositioned quietly into commodities and into short-term treasuries. Look at Warren Buffett. He has more treasuries on his balance sheet than the Federal Reserve does. He's got over 400 billion in cash. Why? He's the greatest value investor ever. Why is he not invested in equities? And why are the insiders selling at a 7-to-1 clip? And why are the hedge funds bailing the Mag 7, which has held up the market for the past couple of years, their lowest exposure in over 24 months? These things, people aren't thinking this way. And I think if we see this type of an environment, that would make sense why you're seeing front running and repatriation of gold and silver and taking it off of the exchanges. So crazy times, my man. Better to, I think, realize a return on your money is great, but return of it right now may be best. And that's kind of what I'm talking about. In buying gold and silver, you're not doing it to become wealthy. You're doing it because it is wealth. And after all of these years, over 5,000 mentioned hundreds of times in the Bible, you see the most well-informed traders in the world making an overt push to accumulate. And the worst part about it all is it's so out in the open, but only if you dig for it. So it's not really out in the open. It's not out in the open because CNBC only shows us gold 1 out of 44 times at all-time highs, yet they show Bitcoin 9 times in that same progression. So there is an overt push, if you will, by the big money to accumulate, and by the people who are supposed to be unbiased and reporting the truth, steering us away from that. So take that for what you will. To me, that's classic misdirection, and done so for a purpose. You're guaranteed to lose purchasing power in the USD. The USD has no volatility, but again, you're guaranteed to lose purchasing power. Bitcoin is deflationary but volatile. Gold tracks inflation and is minimally volatile. Why wouldn't Russia, China, Saudi, and Iran do this? Here you have Max Kaiser talking about the virtues of gold backing a stable coin. That's exactly what Judy Shelton said to me in our interview, that she wants to issue treasuries backed by gold, and then she would envision stable coins sold off of that. Again, that would support the U.S. Treasury market, is more or less what she is saying. It's what Max Kaiser is saying. And it's funny to see him not provide Bitcoin in that statement. I saw another statement right after that. The statement was, it seems the whole point of Bitcoin was to provide liquidity for U.S. treasuries and quell domestic demand for gold while preparations will be made for a gold-backed U.S. treasury. No, well, there's Judy Shelton, including, most importantly, repatriation of all U.S. leased and rehypothecated gold. That's what we're seeing, right? We're seeing the gold flow back into the country. We're seeing people talk of issuing gold-backed U.S. treasuries. But yeah, I mean, the U.S. system has become unsustainable. And is this a controlled demolition, which would be needed before a reset? What better guy to do this than President Trump, who has been dubbed the master of bankruptcy and reorganization from a business standpoint. And part of it is, I think, aimed at weakening the globalist institutions that use our tax dollars, and it seems a lot of them for international agendas that don't benefit the United States at all, like the U.S. Agency for Global Media, the World Economic Forum. Even the way that he's importing gold into the United States and breaking away from the LBMA, which I hope to talk to you about here in a little bit, all of it signals, and I the word that I used last time we talked was American-centric, but it's nationalism, it's self-reliance. and we've had no oversight, and we're in trouble. Look, a trillion seconds ago was 31,688 years ago. We're nearly 200 trillion in debt. So something has to be done. There are people who will tell you that the United States is actually a corporation, and that there's some obscure legal documents that support this, and that he's essentially running a bankruptcy, a reorganization right here, right now in front of us to dissolve the unnecessary parts of the business, the corporation, before restructuring the system. One of the reasons I've always liked gold and silver is because it's analog in a digital world. But everything seems to be moving towards that digital transition. And it's funny, I talked about the Willow chip, I don't know, several times over the last few months, and when I was at the conference I was just at, Cliff brought it up. This Willow chip that Google has already prototyped can do in 5 minutes what the fastest supercomputers in the world can do currently in 10 septillion years. That's 10 to the 21st power. And that's so far out, I didn't even know what it was. I had to Google it. It's one with 21 zeros after it. Yep. And so it's huge. And it takes 10 septillion years to do what the Willow chip can do in 5 minutes. So when you talk about the advancement of technology and the ability to surveil and the ability to, use AI to develop patterns, that's almost like you're getting into the Tom Cruise movie. And that's what it feels like, just using probabilities. And, I know we're getting a little bit out there, but when you see and now China has just come out with a new chip that's faster than the Willow chip. The advancements are accelerating so fast that there's something to be said for having some semblance of anonymity and privacy and exodus, if you will, from the matrix, which seems to be getting bigger and bigger all the way around us, even if the intentions seem to be pure. I think the advancement of technology would lend itself, power in the wrong hands. It's like a nuclear weapon. Whatever you do, whatever asset you choose, it's better than leaving it in dollars. One of my affiliates or outside reps, his house burned down in Bastrop, Texas. And the only thing that was left in his entire lot was his safe, and it was a charred, melted mess. And when they pried it open, his silver was still there, and it was Silver Eagles. They had melted the plastic around it. Everything was green. When we finally pried it all apart and refined it, it got 98% of melt value, 99%. Nice. Because of the refining process. But it just goes to show that, to your point, everything else was gone in his entire house. I mean, everything. So interesting when you think of it that way. You're seeing the LBMA be bled dry and go from T+1 to T+8, which is basically 8 weeks, which is basically a default. And they say it's a shortage of trucks and manpower. You're seeing massive inflows, about 80+ million ounces of silver delivered into COMEX, the largest ever here in the March contract. And silver, 45% of the LBMA float delivered over the last 100 days or so. I mean, things are getting ridiculous. And then you see PSLV, which yesterday morning, or when the market opened up, we saw 1,314,107 shares traded in 1 minute. There used to be days that you wouldn't see that many shares traded, and they were all dumped onto the market, shorting the market. And the reason that they shorted PSLV is that PSLV was starting to, have so much attention. They were going to have to go into the open market and buy a whole bunch of silver, because the banks that have been suppressing the price forever may just have lost the ability to do so easily anymore, because they're not going to be able to offset these positions in London with massive unallocated positions when you have all these entities standing for delivery. People's Bank of China has added 600 tons of gold in 2024 that we know of, probably a whole lot more, not to mention what they purchased. But this heavily unallocated paper gold to physical ratio market is breaking. And when you realize HSBC, Scotiabank, JP Morgan, they depend on these derivatives and these unallocated this unallocated gold to hedge their positions. They're not going to be able to take these massive naked positions anymore, these positions that have allowed them unabated to manipulate the market, because as I've surmised for a long time, there are entities starting with the BRICS and now the United States that are getting wise, I think, to just how important physical is in a game that's rigged. You know, when you see Jeffrey Gundlach come out, the bond king, saying, you know, $4,000 gold is easy and in the cards, you're beginning to see a lot of big name people understand exactly what's happening. These are cash and carry exchanges where the price setting is far more realistic, instead of a futures market where it's you know, 90% paper and 10% physical, and no one ever stood for delivery. And you and I have been talking about this, and you know, the logarithmic decay, little by little by little by little, and then bang. Are we at that point? Well, it sure feels that way when almost half of the available silver has been drained. And now they're saying it's logistics. We can't really get it over to you as fast as we would like. You know, demand for physical gold and silver is rising. And this is a move away from the Western markets. It's a big deal. We'll see how big it is. But yeah, I think this is something people really need to pay attention to, on top of the fact that it just continues to move higher. It seems almost every day now. In China, as an example, when you talk about arbitrage, silver today was at last night was at $35 an ounce in spot in Shanghai. So there is arbitrage around the globe, but not as significant as it was a few weeks ago, you know, because it's becoming too difficult to get it there. So I think that arbitrage, which would necessitate some form of expediency in getting the metal sent this way, when you're talking 8 weeks delay, makes that cost, or that extra vig, probably not really worth the effort. But now that these contracts are being stopped, I think that this is something that put great strain on the physical market, perhaps could put a run on the LBMA and really start to shift price setting and global awareness to other exchanges, in particular Shanghai, Dubai, Moscow. But the United States is now prioritizing delivery over paper, which is something wholly, completely different.